There we go. Let's check this out.
Crypto in the crosshairs again. News breaking this afternoon that the Securities and Exchange Commission is scrutinizing the relationship between the U.S. arm of Binance, that's the world's largest cryptocurrency exchange, and two trading firms with ties to Binance's founder, Changpeng Zhao. The Wall Street Journal is reporting that the two market maker firms, Sigma Chain and Merit Peak, have been controlled by Zhao, but that those relationships were allegedly not disclosed to investors or customers. This latest news only adds to the very detailed focus the SEC has been giving to the crypto space, and as the multi-trillion-dollar market for digital money continues to grow, investors eagerly await news on how the SEC plans to regulate it. Let's see if we can find out and get some news here. Joining us now on a Fox Business exclusive, SEC Chair Gary Gensler. Welcome, Chair Gensler. We appreciate you being here.
Good to be back with you, Liz.
Look, I know you don't speak to individual cases, but on this breaking news about Binance, can you tell us why something like a crypto exchange not disclosing relationships with market makers is an issue or would be an issue for the SEC?
So let me take it to a little higher level. Most of the activity in this asset class, as you said, $2 trillion, is happening on centralized exchanges or lending platforms. And you saw yesterday we had an announcement that I can speak about with regard to one of the large lending platforms. And why does it matter if 95% of the activity is happening there? What's important is investors get basic investor protection, protections against fraud and manipulation. And as many of the tokens on these platforms may well be securities, that's where the Securities and Exchange Commission comes in.
Well, you're talking about the BlockFi settlement, where BlockFi paying out $100 million for handling or at least putting together, allowing people to park their crypto in an exchange, at least an account for a pretty incredible monthly interest payment. You said that those were unregistered and that they have to register. Is BlockFi now registering? Can you at least give us an update on that?
Well, they entered into a settlement arrangement to do so in a timely way. And importantly, what we found there is that not only was it not complying with what's called the 1933 Act or registration, but also the Investment Company Act of 1940, offering the public returns by pulling those assets and investing those assets, the crypto assets. But we're working with them. We're trying to see if we can get
this just feels like a Binance ad. What the fuck is this? Is Gary Gensler shilling crypto?
Inside an investor protection envelope, and then if
it's really on the crypto train lately,
based upon that to invest or even to speculate, that's up to the public. But to have the basic protections of protecting against fraud, manipulation, to have disclosure, these are the things that we have in our stock markets, and really important if this technology is going to go anywhere.
Well, I get it, because you want to protect investors, and I truly believe that that's at the heart of what you try and do. But it has been an exponential growth spurt that we have seen. I mean, did you see the Super Bowl, Gary? All of those crypto commercials, they had them calling it the Crypto Bowl.
Well, but just think about this, Liz. Yeah. In 2005, the advertisements of the Super Bowl were a bunch of mortgage companies like Ameriquest, which that was right into the 2008 crisis. Back in 2000, there were 14 Super Bowl ads about .com companies, many of which went defunct later. So I wouldn't sort of confuse the advertisement with the credibility behind some of this or the viability of these projects.
Well, let me tell you why I'm not. Banks have advertised in the Super Bowl. They've gone under. Certain, drink companies. It's part of sort of the free market, and I understand that this is very much a brand new and nascent investment operation or opportunity for people, but it really feels like it's been a transformational 12 months. I mean, you look at how many people and businesses are choosing to invest in or accept cryptocurrency. So I want to get to the SEC's approval of futures ETFs, Bitcoin futures ETFs. My question to you is this: you've rejected a bunch of offers when it comes to Bitcoin spot ETFs, whether it was Skybridge or all kinds of names. You had Grayscale's application that's being assessed at the moment. You've rejected Wisdom Trees, Fidelity, Krypton. cite every single time the SEC cites, you need more to know about how they're going to prevent share manipulation, fraud, and lack of liquidity. What could any of these funds that are dying to get their ETF out there say to you that would get you to yes when it comes to preventing manipulation?
Well, again, I don't want to get ahead of any specific project, and it comes in front of our 5-member commission. But generally speaking, what's really important is these underlying markets, Bitcoin and the other markets, the underlying cash markets, are trading on exchanges, and those exchanges, I continue to say, come in, work with the SEC, register under the securities laws. It's probability weighted, but you've got 75 or 500 or thousands of tokens on your platform.
Say what you're going to do. What? What? Hey! Hey! What the hell was that?
That Chicago Mercantile Exchange has had a regulated market since 2017 by our sibling agency, the Commodity Futures Trading Commission, an agency I was once proud to chair. So you should know, I think really well of the CFTC. So that's part of that framework. We don't have that framework for the underlying cash market at this time.
Okay, I want to move on to a lawsuit that the SEC has filed with against Ripple XRP. And again, without commenting on specifics, because I know you don't, what's the SEC's theory on certain elements of the crypto world that are considered securities, which would subject them to the SEC's stricter purview, versus currencies which are not held to that kind of purview?
So it's pretty straightforward, actually, is that in the 1930s, after the collapse of the markets and the public getting defrauded, there was a basic bargain, and Congress wrote with a very broad brush the definition of security. And they included like 32 different terms. And amongst those terms, the conceptual framework was the public investing money, anticipating profits on the efforts of others. And the Supreme Court in the 1940s and multiple times since then have had the same approach. My predecessor, Jay Clayton, said it as well as I could say it, that in looking at these tokens, it's rare to find one that isn't doing that. The public is investing, hoping for a profit based on the efforts of some other group.
Okay, but that's with any investment. There is that caveat emptor, buyer beware element to all of the stock market. What confuses a lot of people, Gary, and if you could really clarify here, is, where do you draw the line, the distinction between what is a security and what is an actual currency? Example A, what Ripple did, selling XRP to build out its underlying blockchain network, no different than example B, Ethereum floating an ICO, a coin offering to help its underlying Ethereum blockchain. There is no difference, a lot of people say.
So Liz, you started by saying you weren't going to ask me about specific cases. And so if I can help the audience.
I said example A, example B.
Yeah, but I help the audience know that it's I'm not really allowed to talk about specific cases, but it's pretty straightforward. Raise money from the public, as you say. We have a basic bargain of full and fair disclosure and anti-fraud protections, and you register with the government agency called the Securities and Exchange Commission. And that's really what we're trying to do, is help continue with that basic bargain. We're technology neutral. If people want to invest or speculate in this field, then these tokens and, most importantly, the platforms, the trading and lending platforms, come in, register, do it within the law, not trying to skirt the law.
Okay, we've got so much more to talk about. I do want to quickly ask you about payment for order flow. This, of course, was an issue that came to the forefront during the meme stock craze a year ago, January. The question became, is it a conflict of interest? On the one hand, I do get that there are people who look at this situation and say, well, wait a minute, brokers are getting, are getting paid by market makers just so that individual investors can have free commission trades. You know, on the one hand, it is helpful to the market, but is the answer to ban payment for order flow, Gary, or simply solidify disclosures so that investors can make their own decision about whether they want to pay a commission and not deal with a market maker?
So we're looking at the SEC as to how to facilitate and drive greater efficiency in this market so investors get a better deal. Payment for order flow, as you mentioned, is a payment between a broker that a broker receives for your order flow, and there are inherent conflicts of interest there. We're looking at how we can ensure greater competition. When you place a market order in the U.S., a market order at a retail platform, well over 90% of those trades go straight to the dark market, to a wholesaler that bought that order flow rather than competing trade by trade. And that's what we're trying to think through under the authorities we have.
Sounds like there are a lot of open doors that we need to get inside and look more deeply into. Chairman Gary Gensler, thank you very much for joining us. We appreciate it. Please come back.
Thank you so much, Liz. You stay well and be well.
Thank you. Up next, Charlie Gasparino standing by with instant analysis.
That's about as much as I want to fucking listen to. Up next is Charles Gasparino with instant analysis. Wow. Well, there's a couple of key takeaways for me on that Gary Gensler live stream. I'm gonna keep this up on top monitor over here just in case something pops up that I find to be interesting. Let's go on. So, what is sort of the big takeaways here? Well, two of the things that they talked about, PFOF, I think Liz Claman kind of threw in PFOF, and Liz Claman, if you don't know, was the person who was interviewing Gary Gensler. She threw in a bone there for PFOF. We'll talk about that last. But the big thing that was talked about is sort of cryptocurrency. There's been a lot of talk, a lot of debate lately regarding whether or not cryptocurrency is a currency or it is a security. And how do you differentiate those two sort of things, right? Liz Claman asked a great question. I think the specific question is, where is the line? She wants to know, like, what's the difference between Ripple and Ethereum? Like, if you wanted to raise money for Ripple, these guys defrauded people. How's that any different from Ethereum or from this or from that or from that and then that, right? In a lot of ways, most cryptocurrencies trade as securities and not as a currency. Trey is all right. So the story behind that, I looked up polyamorous because last night on Twitch I was streaming and somebody brought up polyamorous and I was like, what does that mean again? And right when I Googled it, I was like, yeah, that's it. And I have a terrible habit of closing out of tabs. So now you guys know that I didn't know what that means, and you've got that you've got that available to you. But nonetheless, we continue on, right? Where is the line? For me, I'm going to draw this out on the handy dandy whiteboard. This is pretty easy stuff. I don't think you have to think more than a split second to be able to differentiate whether or not this is a security or a currency. So hold on one second. 04693. All right. Beautiful. All right, so let's come back to... I don't care about this. I want my whiteboard. Why can't I not draw on my whiteboard right now? Hey, AMC, in case you're wondering, is trading at $19.05. Not a whole lot happened in that time frame when we were watching the news. Come on, whiteboard. There we go. All right. So check this out. If we were to draw up a dollar, right? This is a currency. You got a US dollar. $1 is typically equal to $1. There's obviously rare examples of this, right? You can go and look at, like, some quarters are worth like 50 cents, some pennies are worth like a quarter, whatever. But for the most part, a dollar is worth $1. And that to me is sort of what I would classify it. Just let this be known, right? I'm classifying this as a currency. If I was to go into the books and try and figure out what a fucking currency is. A security, however, since I wouldn't really want to trade $1 for $1, it doesn't really make sense. I wouldn't go up to somebody and go, hey, Can I give you this dollar in exchange for that dollar because I think your dollar is going to be worth more than my dollar? No, I'm never going to do that. That doesn't make any sense. In fact, my dollar would depreciate in value. That's a currency. A security is, hey, I believe that Ripple is going to be worth more money in a future date than it is right now. So I'd like to buy some, right? I toss some money in. Bam, I buy some Ripple. At a later date, I decide I want to sell some Ripple. Oh, I decide to sell it. And the process you hope for is that you are net positive cash. You want to make money, right? That to me is a security. Is it something you're using as an investment? Is it something you're using to park cash? Or is this something that you're using to dictate the value of something that you're trying to purchase or that you use in a day-to-day life to take care of your expenses, right? That to me is a currency. And a cryptocurrency, which is, I think the name is kind of goofy in and of itself, should maybe be called a crypto security. I don't know, because it doesn't really act like much of a currency. Sure, you can buy stuff with it. You can go buy a pizza if you'd like. You can go do this. You can go do that. But at the end of the day, you're buying that crypto because you're hoping that it increases in value, which is a characteristic of a security. So I think if you were Gary Gensler, the decision's pretty simple. You regulate a security. I mean, in the same way that you regulate the stock market, you kind of have to regulate a security with the hopes of preventing people from getting defrauded, like is happening with Ripple. That's sort of the big thing. I think what Gary Gensler delivered was a bit of a nothing burger. I think it was kind of dog, to be frank with you. But it is what it is.